Welcome to The Explainer. Today, we're diving into a real showdown in the Indian battery market. We're putting two absolute giants, Amara and Exide, head-to-head to see which one might be a better bet for your long-term investment portfolio.
When you think about the Indian battery market, it's huge, right? And two names pretty much dominate everything. Literally everything, from our cars to our data centers. We're talking about Amara and Exide Industries. They are the big dogs, the undisputed titans of this whole industry.
So you might think, okay, they're just two battery companies, direct competitors. And you'd be right, but it's more nuanced than that. You've got Amara, the guys behind that super popular Amara brand. And then there's Exide, a real legacy player with its fingers in a lot of different pies. But here's the kicker. When you look at them as a long-term investment, their profiles are worlds apart.
All right, so here's how we're going to break this down. First, we'll meet the contenders. Then, we'll get into a valuation face-off, check their financial health, see who the big money is betting on, and finally, get to our investors' verdict.
Okay, let's get right into it. First up, who exactly are these battery giants? So both of these guys are heavyweights in the car and industrial battery world, but they've got their own flavors. Amara, you probably know them for those iconic green Amara batteries. They're an absolute powerhouse, especially in the aftermarket. Exide, on the other hand, plays a broader game. We're talking everything from your car and e-rickshaws all the way to submarines and massive data centers. A much wider reach.
All right, round two, the valuation face-off. So which stock offers better value? Let's find out.
Okay, right off the bat, you can see a huge difference in size. Exide is the clear heavyweight, with a market cap of over 35,000 crore rupees. That's nearly double Amara's. But, bigger doesn't always mean better value for an investor. So the real question is, how does that price stack up against what the company actually earns?
And this is where it gets really interesting. We're looking at the price-to-earnings ratio, or PE. Amara's is sitting around 22. Exide, a whopping 41. That's almost double. So what does that tell us? It means investors are paying a much higher premium for every rupee of Exide's earnings. They're clearly expecting some big things from them down the road.
But hold on, when we pivot to profitability, the story flips. Check this out. Amara's return on capital employed, that's ROCE, is almost 17%. Exide is just over 8.5%. That's a huge difference. Basically, ROCE tells you how good a company is at turning its money into more money. And on that score, Amara has a clear edge.
Okay, so performance is great, but what about the foundation? A company's long-term survival, its ability to handle tough times, all depends on its financial health. So let's see how strong the bedrock is these companies are built on.
Yeah, profitability is just one piece of the puzzle. For a long-term play, you got to dig deeper and check out their day-to-day money management.
And here's something that really jumps out for Amara. It's pretty much debt-free. Think about that. In today's crazy economic climate, having a clean balance sheet like that, that's a massive advantage. It's a huge green flag for any investor who doesn't like a lot of risk. Now, to really get a feel for their stability, we have to talk about cash flow. This isn't just numbers on a page. It's the actual cash coming in from their main business. It's the lifeblood of a company, right? It's what lets them pay the bills, invest in the future, and grow, all without running to the bank for a loan.
So if we look at their operating cash flow over the last few years, you can see the trend lines. And honestly, both are doing a good job here. They're both generating healthy cash. Amara's got this nice, steady upward climb. Exide is also looking really robust, especially with that peak in 2024. Bottom line, both of these are fundamentally solid operations.
Okay, time to play detective and follow the big money. See, who owns a company can tell you a ton about what the smart money thinks and how committed the founders are. So, let's look at Amara's corner first. Almost a quarter of the company is owned by foreign institutional investors, FIIs, and that's a big deal. These are large, global funds, and they don't invest lightly. It signals a whole lot of confidence in the company's performance and growth story.
Now let's contrast that with Exide. It's a totally different picture. Here, the promoters, the founders, hold a massive 46% stake. That's a whole different kind of confidence, isn't it? It's not just about next quarter's numbers. This shows a deep, personal, long-term commitment. They are in it for the long haul. All right, we've crunched the numbers on valuation, financial health, and ownership. So, what does this all mean for you, the long-term investor? Let's bring it all together for the final verdict.
So here's the final scorecard, a real tale of two companies. On one side, you have Amara Raja, which looks really strong on those key financial metrics, better valuation, better profitability, and almost no debt. On the other side, you have Exide, the bigger player with that incredibly high conviction from its founders.
So here's the takeaway. It really boils down to a classic investor choice. Do you go for Amara Raja, the one with right now the stronger financial report card and a more attractive price tag, or do you bet on Exide, the big market leader with the founders who have so much skin in the game? And that leaves us with one final big question. The whole energy world is changing fast, right? So who's going to power the next decade? Will it be the efficient, debt-free challenger or the established market champion? As an investor, that's the billion-dollar question you have to answer.